Hello and welcome to IBTimes TV. I'm Leanna Brinder, business editor for the International Business Times. Joining me now is Jeremy Roe. He's the chairman for independent lobby group Bully Banks. So hi, thanks for joining us today.
Leanna.
Good weather, so you got your brollies out and you're here to protest against mis-selling derivatives to Britain's businesses. And so it affects around 40,000. So can you tell me about the latest developments with the banks in terms of delivering redress?
Because of the debate that's taking place today in the House of Commons, we had a late flurry of activity, and over the last 24 hours, the four largest banks have changed their mind about how they pay redress. We've been saying for 10 months it is wholly wrong to inform someone, the banks review the sale of the interest rate hedging project, the bank tells the individual business, yes, they have been missold, yes, you will get your money back, all the money you've paid under that swap, yes, we'll pay interest and we will pay consequential loss, but we're going to hold on to the money that you've paid to us. We're not going to return it until you agree with your consequential loss. And we've said this is, it's offensive. It is wholly unjust, wholly inequitable. Business has been starved for 4, 5, 6, 7 years. The money was taken from them by the banks under a product that was missold, and we're saying now you, the bank, have agreed that it's been missold, you should pay it back to us straight away, and then we will talk about consequential loss. The banks refuse to do that. For 10 months we've told them it's not arguable. It's a wholly inappropriate stance by the bank, and say over the last 24 hours, 2 of the banks have said, yep, we'll give way completely. And that's HSBC and RBS, and we thank them for that. And 2 of the banks have rather grudgingly said, yeah, well, we'll agree, but you know, we're going to sulk about this and we're going to put obstacles in the way. It is wholly, wholly wrong. The banks have to repay the money to the small business, which has been cash starved for a long period of time, as soon as they decide the product's missold. And it's so obviously that that's just, that that's equitable. We're amazed, A, that the banks refuse to do it until Parliament assembles and debates the subject, and B, that the banks had the support of the Financial Conduct Authority. That's the financial regulator, and again, it is wholly wrong for the regulator to agree something that is so inequitable with the banks as part of the redress process.
Well, in terms of the redress that some members have been getting, I mean, it's very meagre considering there's 40,000 businesses out there that are eligible for review, but only around 30 cases have actually been offered redress. Can you tell me a little bit about maybe the kind of redress people have been offered? Is it satisfactory, or is there still a lot of work to be done?
There is an awful lot of work. This is not the end of the process. It's not even the end of the beginning of the process. It really isn't. There are some 30,000 SMEs that really should be getting redress. They've excluded 12,000 of them by a false concept. They have decided that they're sophisticated and are excluded from the redress scheme. That's the regulator and the banks together. That's wholly wrong. Those are the largest players in this situation. They have got the swaps with the biggest value, but sophisticated within these terms may include window cleaner, it includes a couple of garages, it includes care homes, hotel owners, it includes people who've left school with very little education, formal education, who've been successful, they're talented individuals, and they've built up an empire of houses, of properties, of garages, of hotels. But that doesn't make them financially sophisticated so that they understood the product, and I find it extraordinary, deeply disturbing. I think it's quite shameful that the regulator should side with the banks and exclude them from the redress process. We have issues with the nature of redress. The regulator has allowed the banks to provide as redress an alternative product, which is another swap. So you have a situation in which someone sold a product which is wholly unsuitable, and if it's a 5-year swap, the bank or banks may cancel it. But if it's a 20-year swap, the bank is allowed, put in its place, a 5-year swap. It's absurd. We have a situation of a member who had a 6-year swap and the bank has cancelled that but substituted a 5-year swap. It's absurd. The issue is that these products, which were missold to small businesses, in other words, there was misconduct by the parties selling the product. There was misbehaviour. There was wrong. They've sold these products to small businesses and they are not accepting the totality of the responsibility, and they have to accept the product was missold, it should be cancelled, and it should not be possible in this redress scheme for a swap to replace a swap.
Okay, and I mean, this is only the first part of, I suppose, the whole scandal, because everyone here are business people. Everyone here, like you've just pointed out, come from all different areas, all, majority of them, all self-made businessmen, which is great for the economy. However, even if everyone got redress after this, you still have to continue your business afterwards. So what have you seen in terms of banks and business relationship? Has there been any worrying behaviour, or have they been quite good with it?
The issue in reality is it is 16 months since the FCA announced that it agreed with the banks that they were putting in place a redress scheme. That's 16 months. And we have a pittance of cases where the banks have actually agreed redress. It's laughable, truly laughable. We do not have concrete examples which we can say, yep, that tells us the banks are going to do the right thing. We have indications that in some cases the banks may do the right thing. That's not some of the banks, but the banks in some cases may do the right thing. But I can't say here with confidence and say the problem is solved, the banks are going to do the right thing. The banks are in a totally dominant position. And they can, for example, a businessman may have borrowings at 1.5% over margin. He has 5 years, 6 years, 7 years of his business disrupted by the sale of or the missale of a wholly unsuitable product, and now he's faced, when he comes to refinance, with the bank saying, well, I know you had a margin of 1.5%, but actually nowadays it's 5%, it's a 6% margin. And that can ruin a business, even if it's successful in the redress process. We're saying to the banks, please come forward and say, yes, we will, as part of the redress process, agree new facilities for these businesses on reasonable terms. And we've proposed a basis. We say, put in place reasonable terms for a period of 3 years, which will give the business time to sort itself out and find new finance, go to another bank, if it has to, in order to survive. We think that's an incredibly reasonable thing. The banks have been very reluctant to engage with us on that. And as we're talking about the issues we have out here, the interest rate hedging products, the missale of those, is merely the first in a number of issues. And there's hidden swaps, which are basically fixed interest loans where there is no disclosure of the break costs. We don't know what the scale of the issue is there, and we're asking the Treasury and the FCA to investigate. We have over 100 members who say we will missold these fixed interest products. We're saying it's 100 small businesses, it's unlikely that they're the only ones, but we don't know. Regulator, Treasury, investigate what the banks did. Did they sell these products without disclosure of the breakage costs? Did they sell these products without telling people they were being sold products, but people being advised to enter into these products? And if they did it on a grand scale, that's misconduct, just like the misconduct of the interest rate hedging product. So we're saying, very reasonably, very rationally, look at this, Treasury, look at this, the FCA. We're actually saying to the banks, you should look at it as well. You've got the records, you know your situation, and you should, if this issue exists, today decide we, the bank, are going to deal with the problem where our misconduct, our missale has affected our customers. The whole thing, if you look at a motor vehicle and you have a motor manufacturer and he provides a product with defective brakes, what does he do? He doesn't worry about his bottom line, he doesn't worry about his balance sheet, he sorts the problem because people are being very badly affected. That's what the banks should have done with interest rate hedging products. That's what they should do now with a number of issues which we're coming forward with.
Well, good luck in the fight for the future, and thank you very much for joining us today.
Thank you, Leanne.
And that was Jeremy Roe. He's the chairman of Bully Banks.